Hi, everyone, and welcome to another edition of Talking Sense right here on Yachting International Radio. My name is Ria. I am your co-host, and of course, I'd like to welcome back the amazing Alasdair Milroy from Breaking the Mould Accounting. How are you, Alasdair?
I'm good, Ria. Yeah.
I came across something just the other day on company growth, and I'm seeing a lot of companies within the yachting industry. They start off with a couple of people or one person, and then they take steps. And I don't think a lot of people are really prepared properly when their business starts to boom. It affects your valuation as a company, your taxation, your organization, how you manage the people. There's so many things that you have to think of. And I think that so many people think, oh, just my business, when it grows and I have more people working for me, it's going to make it easier. But that isn't necessarily the case, is it? Because it adds heaps more work.
I think the challenges change, and I think for most business owners, it means at some point recognizing when you start up, you're working very much in the business, it's yours, and you're speaking to the clients and you're the face of it and doing most of the work. And as it grows, you can't scale up based on just yourself. So as you start bringing more people in and then having to sort of rely on them and make them responsible, that's quite a first change. I think when you get probably to 50 or 100,000 turnover, then going up to 250, you've got to start stepping out of doing the work yourself and actually working on the business rather than working in the business. And yeah, having a plan, I think, and some to really think about where you want to go is very important, and then how you're going to achieve it, because it certainly takes a very different skill set. And you see this with businesses that are successful and float off, that often the entrepreneur steps out of the CEO role as the business becomes more of a corporate machine, because it's a different skill set.
What is the difference between working with, say, contracting somebody or employing someone? Which is better when you're just getting to that growth stage?
I think it depends on what type of role it is. I think using an executive probably as a first stage, as someone's growing their business and needs more time, I think you really got to focus on what are the things that you're doing that really aren't valuable for your time. If the stuff that you're doing, someone could do for 5 or 10 euros now, then you shouldn't be doing it. So bringing someone in, and a virtual assistant or a VA or an executive assistant can be
so more on a contract,
really useful,
sort of, rather than employee, contractual basis.
I think certainly when you're a sole practitioner, that gives you a bit more flexibility around. There's also that taking on employees is a big commitment for any business. So I think initially that contract type role works very well. I think as you need to actually bring people in to deliver your products or services, and maybe in sales roles or that sort of thing, then you probably need to bring employees in. Again, I think a lot of that's actually empowering them and being able to give them a responsibility to take on those roles and do it without you having to still be responsible whilst they do the work. Because I think that's where a lot of owners end up getting dragged back into the business and working in the business rather than really getting the value from their staff. And that's about creating the right culture, having the right systems and training in place that you can deliver the service that you'd like to deliver personally, but you can make sure that's consistent across the business as you're no longer involved.
Well, I guess there comes a breaking point, doesn't there? Like, you're contracting people for this and this, but at some stage that becomes more expensive than just hiring an employee, doesn't it?
Yeah, it can do. I mean, obviously, when you take on an employee, you're taking on a lot. With a contractor, you're paying out either for an hour or for certain deliverables, and it's not usually fairly definable. With an employee, you're having to pay for their holidays and taxes, and there's a lot more cost than just the salary going out each month. So you need to make sure you're getting the value from that. And part of that's having the right processes and training in place to make sure that they are equipped to do the work that you want them to do to the level.
How does that work for most companies? You start off as an entrepreneur, as a sole trader, for example, and you get to a certain amount of income. I know in Canada, you can earn up to, say, for example, $20,000 before they actually implement taxes. Does that work in most countries as well?
Yeah, there's normally thresholds, particularly for sales, to your VAT or goods and services taxes. depending on where you are. There's normally a threshold of turnover where you have to register for those. So that's worth keeping an eye on. And there's also, that will change your accounting. As a small business, you maybe elect to just account on a cash basis, which means you're recognizing your income when you get paid and your expenses when you pay them. As you get bigger, normally you'll be expected to go to what's called an accruals basis, where you're actually paying tax on your invoices, whether or not they've been settled. And I think that's a crucial. As you grow, particularly rapid growth, you've got to be careful that growth's coming with the right profit margins as well, that you're not risking what they call overtrading, which is you're seeing your sales go up, but actually if your sales aren't priced properly and you're not making the profit margin on, then arguably you're not really adding anything to your business. There's no point doing lots of sales if they're not profitable sales and you're discounting, for instance. So I think pricing is extremely important for any business growing.
How do you figure out pricing? Like, if it's service, for example, how do you figure out how to charge for that service?
That's a good long debate. And historically, a lot of people have paid on time, particularly in service industries. Accounting, professional services particularly, have always been time-based industries. There's a big problem with that for businesses, is that actually you're limited in the amount of time that you have. So if you're charging on an hourly basis, there's only so many hours you can work. And the only way you can increase that revenue is then bringing more people in to have more people working more hours. There's also no connection often with the way that time is spent and the efficiencies in your business. So it's not very fair to customers. If they're paying for your time, but your time's not efficient, then they're probably going to have an argument or complaint about that at some point. So I think figuring out where your value is and understanding your cost base. You're going to have your fixed costs, which if you're renting premises and things, the insurance, those sort of costs, you know what they are and they're going to be covered. And then you've got to look at what are the additional costs that come in and how do they increase as you do more work. And I think for services businesses, being efficient is critical. Having systems in place, the people, as you bring employees on, they're trained in a way that you want to deliver the services that you're doing.
Well, as an accountant, is that something that you're capable of working with a company to do?
The key is having the right data in the first place. If you've got the financial data, so I would start by looking at what data we've got and getting a business's financial processes robust, that you've got reliable financial information. And then you can start looking and saying, well, what if we rent another premises or take on 3 staff? How's that going to impact? And a lot of the software allows accountants to do that sort of scenario modeling, but you've got to have the base data in place. And I think also what's really important for any business owner is actually understanding what do they want? What is their personal vision for the business? What do they want out of the business? What's their, just the business vision, but their personal vision? Because not everybody wants to grow to 100 staff. Some people might be quite happy working in a business of 5 people. So understanding what people are trying to achieve and what the balance is in their lifestyle, I think is also important for an accountant to understand, then building the business that's going to support that vision.
It's almost as if an accountant is your business partner, the one that really, if you're the creative type and you've got sort of visions of doing whatever, the accountant is more like the solid one that says no, or curbs you, or pulls you back, or sends you in the right direction, or tells you it's almost like a business partner.
Yeah, I say that is what a good accountant should be. You're very much part of your business, understand what you're trying to achieve in your personal vision, and then hold a business owner to some account around, well, what are your goals and are you achieving those things that are going to get the steps that are there to get to those goals for the growing revenue. And every business, whatever your vision is for your business, you have to make profit to be able to deliver that vision.
Alasdair, I've got to say thank you very much. As usual, it's been very interesting and informative.
Thank you, Ria. It's been a pleasure.
You've been listening to another edition of Talking Sense right here on Yachting International Radio. My name is Ria, and of course, we'll see you again next week.